Circle posting quarterly results, the circulation of its USDC more than doubling from a year earlier. Join us right now, first on CNBC, is Circle's CEO Jeremy Allaire. Good morning. We were just talking about how you beat top line, bottom line. This is maybe what happens when you have a good company, but also an emerging technology that is the hottest play. And by the way, right now, you are the real way, and really maybe the only way, to really get great exposure to this world. So let's talk about what's going on, because I think competition is about to come your way. And so I'm trying to understand where this all goes.
Yeah, lots to talk about. Thank you, for having me on. We had a very strong quarter, as you noted. Revenue grew 66% year over year to $740 million. We obviously saw an enormous increase in the usage of stablecoins on our network. So USDC usage on blockchains, grew to $9.6 trillion of volume in the quarter. That's up from 5.9 in the prior quarter, and up, I believe, over 600% year over year. But across the board, what we are seeing is the technology has been advancing rapidly. We're making some major moves in the technology space that happened also in the quarter, which we can talk about. And companies all over the world are diving in. And while there's some focus on, hey, there's going to be people who are going to try and build stablecoins or other things, we are, I think, moving at pace to do two things. We're building a full stack internet platform business, from the operating infrastructure at the network level to the stablecoin digital asset layer to the application layer. So we're really transforming the business to serve the needs of these mainstream companies, and hundreds of them are getting involved with this as we speak, and we talk about some of that in our earnings release as well.
So the thing that I'm trying to figure out is, it does feel like competition is coming. You're acknowledging that competition is coming?
When you get regulatory clarity, that's it becomes a free market. Anyone can play. Now, what we've also seen, and this is actually in our results, is that we've expanded our market share. We grew our market share by over 600 basis points to 29%. We've expanded our market share in the usage of our stablecoins. And other stablecoins that have entered the market have actually had very limited success. And so this is a network effect business, liquidity network effects, utility network effects. So when major companies like Visa or Deutsche Börse or leading banks like Standard Chartered, or leading banks in Latin America like Itaú and others, when they're choosing what to build with, they're choosing to build with us because we have this broad utility and these broad network effects. And so, I've very consistently been seeing that this is a winner-take-most market structure, and that's playing out in the market. It's playing out in our numbers.
What happens when some of the big banks start to play in this game?
I think the banks are going to do things that extend their existing approach to money, meaning their fractional reserve deposits, maybe making those exchangeable between banks. I think that's very different than a general purpose form of money on the internet. That's public internet infrastructure that anyone can connect to and use. And so I think the approaches are going to be different. And in fact, we see banks as one of the single largest opportunities for us, partnering with banks, providing our infrastructure to banks. So it's been actually a really exciting time. Arc, our blockchain network, what we call an economic OS for the internet, we had many of the world's banks, from Goldman Sachs to Commerce Bank, Deutsche Bank, HSBC, Standard Chartered, BNY, State Street, so many major banks who are working with us at the infrastructure layer as well. And so banks are, I think, represent an enormous opportunity for Circle.
Let me ask you a different question. We talked about it just yesterday, and last week we had Kathy Wood on. Maybe you saw her.
Yeah.
She effectively took down her she has some very big expectations for the price of Bitcoin, but she took it down from, I think, $1.5 million a coin to $1.2 million a coin. And her argument was that she was surprised to some degree, and I don't want to put words in her mouth, just about the success of stablecoin and the idea that stablecoin could ultimately crowd out using Bitcoin as a transactional currency, if you will.
Yeah, I mean, look, Kathy's fantastic. She's been a big believer in Circle for a long time. And I think, the numbers are straightforward in some respects, right? There's $120 trillion of aggregate M2 money. About $60 trillion of that is cash and non-interest-bearing demand deposits. That's an enormous market. And in fact, with QE and other things, like the monetary base will grow. And the shift to hyper high utility money, that is programmable, that runs on the internet, is a fundamental structural shift, and it will take greater and greater share of that form of money. And so as a medium of exchange, but also as a store of value for many in the world, like Itaú, the Latin American bank, the largest Latin American bank overall, they're using USDC to offer a digital dollar store of value to their customers.
Jeremy, we got to run, and they're gonna kill me, but I have one last question.
Yeah.
There is a concern that treasuries are going to move out of banks to effectively support the stablecoin universe, and as a result, it's going to take those treasuries and the ability to lend out of the economy, and that means there'll be less lending and therefore less efficient use of money.
So I will take very firmly the other side of that debate, and very quickly will say that stablecoin money is safer money, and stablecoin money will become the most desirable money to borrow. And credit markets will develop all around the world around borrowing and using this form of money. And so I believe that there's actually a tremendous opportunity to reinvent the credit delivery system, to move away from some of the risk-taking inherent in banking and move to something that is actually a safer form of credit delivery than we have today.